haircut, I wanted to go ahead and make a quick video. Very nice, excited announcement to make. My significant other just got accepted into medical school at the University of Arizona College of Medicine, Phoenix. So she's going to become a doctor. Now, I don't know what type of doctor she's going to become. But I'm about done with my medical school career, so I'm about to become an MD. She's about to enter her medical school career, so definitely very exciting. So I wanted to make a quick video. We're just going to go ahead and just tell you the things that I'm looking at, things I'm, just my perspective on what's happening in the market, given what happened this week. So I saw a couple of graphs today regarding how millennials are just buying the dip. And we know this. We've talked about this. Millennials keep buying the dip. They just, they haven't stopped since 2020. And what this basically shows me is that there is a transfer of stocks between the boomer population, which in history has had the biggest wealth ever. They are basically the beneficiaries of the wealth created in America. Pretty much everything past the 60s and 70s and 80s and 90s and then onwards has just been complete and utter growth. We're talking growth like we've never seen before, okay? And now boomers are pretty much basically retiring off of this wealth, okay? So, Dr. Pro, hey dude, why is Clove going down? I hope we're not getting lower and lower, so we're going to go ahead and talk about that. But also, finishing the thought off of the boomer population, they're selling off and getting rid of all their stocks because they're about to retire. They're going to go in and they're going to put themselves in a very nice cush 10-year note, paying 3 to 4 whatever percent market rate that they have right now for money market funds, and they're going to enjoy their life savings, right? And then take a consistent risk-free rate, because why invest your money in the stock market if it's risky versus a risk-free rate, which is backed by the United States government, okay? And if the United States government fails, well, then you got bigger problems because you're gonna have other, right? If that fails, then everything else does, right? Another thing is housing. Out of all the viewers we have on our channel, and then all the people that in your lives, how much of them, or how many of them, own their own home? How many of them are still in apartment complexes or renting? So the owning of a home, which has been a symbol of really the American dream, has become so distant for millennials and beyond. So that's something to also look at, because the housing market has appreciated like no other. So why am I talking about this, and what's the point? Well, if you look at the history of all stock market drops, historically, ladies and gentlemen, every time the market drops heavily in one year, it bounces up like crazy the next year, which we saw a little bit of this year. While we're up, Tesla was up, I believe, 80 to 100%. Now it's only up 50% year to date. The S&P 500 or the Nasdaq is up 8.5% right now, year to date. But overall, I believe one exception, there may be others, just calling off memory, I don't have my notes or anything. I believe back in the dot-com bubble crash, I believe there was 2 consecutive years of decrease, negative, and then it just followed by a complete boom in the S&P 500. So what I'm trying to say here is that, I'm hoping 2023 goes to the garbage. I'm hoping it goes to the shitter, right? Because I know 2024 and beyond is going to be insane, right? Because inflation, we need time for the Federal Reserve's monetary, increase in interest rates. We need that to circulate through the economy. We need to just destroy the economy. But they're trying to go for that soft landing. And let's be honest here. Wouldn't it be nice if we went through a hardcore recession back in 2021? We would be done with it right now. But they want to go ahead and do it slow, to maximize, to minimize the least suffering, not maximize, right? So that's pretty much what's going through my mind right now, is that when is that bull market going to happen? And the only way is that inflation needs to stop, right? This thing needs to go down, all right? And that's where we're headed right now. We need to look at that. Now, to go ahead and go over Clover Health and all the other growth stocks, back in 2020 and 2021, if Clover was focused on profitability, investors would be mad. Be like, why aren't you focusing on growth? X, Y, and Z company is growing this much. Why aren't you focusing on growth? That was the incentive because, let's face it, retail investors were driving that market, and then it was supported in a perpetual cycle by hedge funds driving up that type of market. You can oscillate between value and growth. That's why it's really important when you have a portfolio. I would say a good portfolio consists of 50% value and 50% growth. So you don't have to wait essentially buying the dip or trying to time the market and when's a value play versus when's a growth play. You oscillate between them and do an intrinsic value calculation to essentially get the bottom or when something is undervalued, regardless if it's value or growth. But I believe that once Clover reaches profitability, what's going to end up happening is they are going to essentially go ahead and convince the street that they are and have a working business model. I don't have to prove to you guys that artificial intelligence is going to change the professional landscape of how we conduct business in America. I don't have to tell you that because you know it now with ChatGPT or GPT-4. In fact, I'm writing a paper and I messaged the CSO of Microsoft, Eric, and he responded. I was like, whoa, right? And he said, send me more information about it. Hopefully I would get to publish with him, but regardless, I'm going to publish this paper. It'll essentially be about USMLE and the licensing exam medical students take and how GPT-4 essentially compares with that. So pretty much it's ready for publication. I need to just finish typing it up. The results are going to surprise you. All right. So this is basically where we're at right now. I don't have to prove to you that artificial intelligence is the future. What we're living through right now is the creation of the internet cycle. And Clover has data. And data is gold. Now, if they can go ahead and take advantage of this data and be able to use it to actually make capitalistic sense, then we're going to see Clover do some amazing things. So what's going to end up happening is, and I keep saying this over and over again, Clover is going to go ahead and focus on profitability. Once they get profitability done and over with, and they show that they have positive free cash flow and their gross margins, which I want to know, their gross margins are terrible. Like Clover, if you're watching this, focus on your goddamn gross margins. They're terrible right now. You need to go ahead and work on them, okay? And once that's done, then they can go ahead and turn on that growth machine. That growth machine, you already know how fast this thing can grow, okay? You've seen 100% growth rates. We've seen 150% growth rates. We've seen growth rates like no other with this company. But right now, it's not the time for growth. You can grow 800% every year, but if you're burning $500 million in cash, no one's going to look at you, okay? But once the economy changes, and once inflation is at a 2% rate, and once something breaks, and recession hits, monetary policy gets turned back on, and the money printers get turned back on. I mean, you guys are listening like, this is too easy, Al. It's that easy. That's how it works. That's how the stock market works. It goes, it's controlled by the Federal Reserve. It's a Federal Reservist market, and you just got to follow what the Fed does, right? And that's what we're looking at. And if you look at a couple of companies right now, they're basically oscillating, and they're trying, especially with Clover, trying to form a bottom. Right now, the bottom for Clover is the book value, which give me a couple of weeks. We're going to go ahead and show book value again on the computer screens and have a better illustration. But right now, Clover is trading near book value, and that's how it's being evaluated. Now, what is book value? When a company undergoes bankruptcy, this is how much it's worth. So it's pretty much trading at what it will be worth in bankruptcy, okay? And that's pretty much what it is. And the more they burn, the more book value goes down. So that's why they got to focus on profitability to add value to the company. And once all that's done, and once they prove their business model, and then they can turn on that growth machine, then you're going to see Clover at highs that you've never seen before. And I have to just emphasize this really clearly. I have to emphasize this. It is hard to make money in the market. Do you think Tesla investors, Tesla was $18 back in 2018 and 2019. It was $18 Tesla, okay? And investors were scared shitless that it was going to go bankrupt because of the Model 3. How many of those investors sold thinking that, oh my God, and they sold at the bottom? Because remember, There's always a buyer and there's always a seller. How many of them are basically sitting on their asses now, wishing that they went in and got in, and they sold at the bottom? That's just how it works right now. And honestly, for all the retail investors that do sell, I'm sorry. I tried my best to go in and show kind of how the stock market works, show graphs, and do my best due diligence to show you that you need to be greedy when others are fearful. And when it comes to finding a 10 bagger, and now that it's dropped so much, it's going to be more than a 10 bagger. It takes time, discipline, and consistency. Okay? There are people out there that are holding at $8 to $25 and they're bitching, right? And they're like, oh, I have 10,000 or whatever thousand shares at like $8 or $10. You've had this wonderful opportunity, and what we're going to see is we're going to see a double dip. We're going to go in and see a rise, and we're going to see a dip, a heavy dip, because investors want to get the hell, speculators want to get the hell out of this stock. And what they're going to do is they're going to sell at around maybe 8 to 15, around that range. And that's when institutions are going to come in and they're going to pick up all those shares. Why institutions? Because if it's guaranteed based off an intrinsic value calculation that it's going to, it's going to pretty much consistently give 10 to 15% year over year, why not, right? But right now, we're living in a time where the risk-free rate is 4 to 5%. Why on earth would people put their money in stocks that has a risk, that is, some stocks are overvalued, when they can get an easy 4 to 5% return and wait until the Federal Reserve is done with their quantitative tightening? Okay? So that's about, fingers crossed for Clove. I hope after 2 to 3 years we will see this video again. Most definitely. And we're going to go ahead and see this, and it's going to be very amazing. I'm going to replay a bunch of shit from the past, and I hope that with this, it'll build some credibility to how this market works. Because just imagine all the people that sold in 1999, in 2000, and all the crashes that happened, right? Now, so that's pretty much what's happening. And if the stock market drops even more in terms of recession, well, a lot of people are saying that there might be a recession in Q3 or Q4 of 2023. And I'm actually hoping for that. We need a big drop. We need that VIX to go up to plus 30, 40, 50. We need that just dagger of blood in the market. Just to, margin call, just annihilation. We need that, right? We need that. Okay? If we don't get that, then, we're just going to basically, just have this stupid soft landing. And I just want to take a freaking nosedive and just crash the whole thing, so then the freaking Federal Reserve can just go in and just print money, right? But we're just taking it slow right now. So we have to look and be optimistic and say, okay, there's an opportunity here. Stocks are depressed, a lot of them, and we're going to go ahead and take advantage of this, because back in the day, buying Clove at SPAC price was $10. 10,000 shares of Clover was equivalent to $100,000. 10,000 shares now is equivalent to like $7,000. Complete difference here, ladies and gentlemen, okay? So I hope that's clear, okay? But we're going to go ahead and go back to our normal videos. My apologies on the limiting of the post, because I'm just completely busy. And honestly, what else is there to talk about, ladies and gentlemen? The earnings is coming up, and there's no reason to make repetitive videos to waste your time, and honestly waste mine too. So I don't like to waste your time in basically making all these videos to just waste your time. It's like, and if you need those videos to get crodled, then you shouldn't be in the market. You shouldn't be in the market, right? I can't believe I did that, right? But you shouldn't be in the market, guys. If you need the videos, you need someone else's ideas to help you. I'm sharing my opinion, and I expect you to do due diligence, and I expect you to be investors like myself, and so we can have a good discussion. Now, if you want to reach me 24/7, we do have a stock terminal that investors talk to me all the time on that, and it has access to a whole bunch of information, shorts, whatever you want. It's all there, and I put it at a reasonable price that's cheaper than the Bloomberg terminal, and there's a 7-day free trial. So there should be a link down below if you're interested with that. But that's a good way to kind of get a hold of all, because I do message on there daily. So if you do want to see what I'm thinking daily on the market and trading ideas and short squeeze ideas, which we have companies, going up 30 to 80 to 100% every other week, or every week, honestly, but let's call it every other week to be safe. They'll be linked down below if you're interested, okay? All right, let me go ahead. There's one more comment here, and then I'll be done with the live here. So in terms of the RS reverse split, I made a video about that in like 2-3 months ago. I made a video about that. Watch that video, because that's pretty much all I have to say about that. It's same thing. They need to achieve profitability. If they can achieve a profitability, then that won't happen. And if they run out of time, they can file for an extension. It's pretty much, we went over that, right? So watch that video on somewhere on the YouTube playlist, and it goes over that, right? But that's pretty much all I have to say, guys. And I hope you enjoyed this video. And please like and subscribe and do all that YouTube shenanigans. I'll see you on the next one.